Let's talk about internal controls for inventory, equipment, and other assets. It is important to have a detailed recording and accounting process that can provide the exact number of inventory product or equipment on hand at any given time. Otherwise, there's no way to accurately determine what exists or should exist in the warehouse or building. This is usually done with the aid of accounting software. You also have to protect the assets with physical controls. This usually starts with a warehouse, building, or parking lot with a locked gate. Only employees with a business need should be able to open that gate. There also needs to have periodic checks done to ensure that all items in the accounting system are still on company property. This is usually a process where one employee, without daily inventory or equipment responsibilities, gets a list of what items should be on hand and where they should be, and performs a count to make sure it's still there. That employee would investigate any discrepancies and inform management of any issues that arise. In addition to any assets that are going to be used by an employee, should be signed out and signed back in by that employee. As with all internal controls, management needs to stress the importance of the procedures and not circumvent them. Let's talk about internal controls for cash receipts. The most important procedure to have in place with cash receipts is the immediate documenting of any cash or checks received. All checks should be marked for deposit only as soon as they are received and deposited with any cash received into the company's bank accounts daily or as soon as possible. It is substantially harder for cash to go missing if an initial list of receipts is compared to the amounts recorded in the accounting system. Monthly bank reconciliation should be done for all companies' bank accounts as soon as the monthly bank statement is received. This reconciliation needs to be done by an employee that is not receiving cash or checks in a normal course of responsibilities. In the case of cash drawers or tills, only one employee should be responsible for the cash drawer at any one time. The employee that is responsible for the cash drawer or managing accounts receivable should not be able to issue refunds to a customer. A reconciliation of any cash drawer should be done the earlier of the end of the day or when the employee is taking over that cash drawer. Limited individuals should have access to the company's bank accounts, cash, or have signing authority. Even with a limited number of employees, segregation of duties can be achieved through checks and balances by management.